nice time of year to think about what you're thankful for. And what are you thankful for, Natalie?
You know, I'm thankful, I think, most of all for my family and getting to spend some time together around this time of year.
Yes.
What about you, Megan?
Yeah, I'm thankful for family and all of our great clients and another great year in business.
Yes.
And speaking of that, it's a great time of year to look at your financials, look at your business, and make a plan for 2020. That sounds weird to say too.
Yes.
But the first report you're going to want to review on your QuickBooks or whatever financial software you're using is the balance sheet. And that shows your assets, your liabilities, and your owner's equity. And first thing to check off is, have you reconciled your accounts?
Right.
And hopefully you have, so that will be a not so painful process. But if you haven't, there's still time, and it isn't that terrible if you start now. Don't wait until April.
Right.
And
what are some reasons that you would want to reconcile, Megan? What does reconciling do for you?
Right. So reconciling just helps us find out if there's things that are not cleared. That means extra things in there that haven't actually hit the bank, or maybe people just didn't cash their checks, which is okay to leave those too. And then the other thing is for duplicate entries. So we're looking for two things there: extra things that shouldn't be there, and things that are there that maybe shouldn't be.
And what about maybe something you was missing too? You know,
Oh, yes,
you might
missing.
have forgot to write that down in your register, forgot I wrote that check until it came through the bank.
Yep, that is another great thing. So there's many reasons to reconcile. It really helps you see if there's things that have not cleared the bank or extra things that haven't. So that is the reason for reconciling. And then you'll also want to reconcile your loan accounts. So that will put in the interest if you haven't been splitting that each month. At least do an entry at the end of the year showing this is the interest year to date, and then reconcile your loan so you know that everything matches what the bank had.
And where would you find how to know what your interest is and the amount of your payments and splitting those out?
Yes.
What do you recommend people do?
If you have online banking, that's one spot to find it. You will get a statement from many banks at the end of the year showing year-to-date interest if you haven't been splitting it each month. Some people get a monthly statement for loans, some people don't. So that's kind of specific to each person. And then you also want to review your accounts receivable. So hopefully you've been able to collect on all of your accounts and you aren't carrying lots of balances for other people. But if you haven't, you will want to review that. So a good report to pull up is the AR aging summary, accounts receivable aging. Mm-hmm. That just shows by 30, 60, 90 days past due. And you can kind of look in that 90-day column and be wondering if, am I really going to collect these? And if you're not going to be able to collect it, if you've just given up completely, just remove them with a credit memo so that that's not in your books and it doesn't keep carrying into the next year.
Right. The other thing that sometimes we'll find is, you know, businesses that are service-based, they might actually have forgotten to invoice somebody.
Oh, yes.
They might have performed some work and intended to send that out, but it didn't get sent. So just making sure that they've actually recorded all of their sources of income for the year.
Yes. So that is another spot to find that. You can kind of look through your client list and see what you have.
Right.
You also will want to review your accounts payable, and that's a similar process just on what you owe other people and making sure your bills are in there. This is especially important if you're an accrual basis. Right. If you're cash basis, this could come and go because it's really going to matter what checks you've actually written is the only thing that will count for taxes.
Right, but you want to make sure you get all those expenses in that you can deduct on your statement. Yes. So if you've gotten a bill, make sure it gets entered so you can take that at tax time.
Yep, that's right.
All right, what other things should people be looking at? What other statements should they review,
inventory.
Megan?
If you're going to take an inventory on December 31, if you only do annually, you'll want to make sure that happens and you enter the adjustment. You also want to review the equity account. So people if you have owner draws that you've taken out, as well as if there's personal things or things that you've paid for personally, but they are business expenses, you would want to submit a reimbursement request to your business, and that you could either write yourself a check back or you could just enter it as an owner contribution. Right. So if you didn't actually want to take the cash back out, you could just enter it as a contribution and that would increase your equity. And so that's where you would look at for that to find that.
Sometimes we find that with small businesses that, you know, or maybe just sole proprietor, they have a couple of employees, They got a credit card, they use it for business purposes. Sometimes they use it for personal purposes as well. And then sometimes they use their personal card for business expense. So making sure that you really go through all of that and make sure it's classified to the right area is really important.
Yes, and so you just want to make sure, obviously we try to keep business and personal separate. There are just those certain exceptions, so you want to make sure. Or also if you track mileage reimbursement, that's another thing. You want to make sure that you've got that all compiled and that entry made so that you get that mileage deduction.
Yes, perfect.
Yeah, so that's kind of the balance sheet. So what about on the human side?
Yeah.
What else should we be looking at for our employees that we value and want to keep around for another year?
Right. So obviously at Multi-Business Solutions, we love to talk about the numbers and we love to talk about the people, and we want to help businesses with both. So there's really important things to do on the accounting side, but I would say also, like you say, with the people, just as important. And the first thing I always encourage people to do is think about a year-end review. And I know there's some controversy and discussion out there about whether the year-end review is really that valuable, but I still personally believe it is. It's great to be giving your employees feedback throughout the year, and that's obviously great. Maybe you do some quarterly checks or monthly even or something, but the end of the year is just a great time to sit down with them and be able to say, these are the things that you did well, these are the things that we want you to work on for the next year, and set some goals for them for the next year. We can help with businesses if they don't have a form or a process in place. We'd be happy to help people, create a self-evaluation form for the employee to fill out, create a employer evaluation form for the supervisor or the owner to fill out, and then think about with that, are you going to be giving raises? Doesn't mean you have to just because you do an evaluation. You certainly don't. It's still important to do the evaluation, but if you are going to give raises, I like to say, let's try to keep them merit-based, and so how they scored on their evaluation. So that people that are high performers are getting rewarded for being high performers. People that need some work realize that that's why, and why they're not being maybe compensated what they think they should be. But so that's the other thing I would say, as you're looking at year end, if you don't do it the end of December, it should be right away. Think about the beginning of January if you just don't have time right now. But
do you recommend that people do them all at once? I mean, what if you have 20, 30 employees? That can just really be overwhelming.
Right. It just depends what works for you, I guess. It's nice if they do it all at once, or if you're not going to do it all at once, that you do it on their anniversary date. Then would be the other option.
That's another good
so
option.
They were hired in June. We're going to do your evaluation in June. That's a way to spread them out, I guess. But that's something you also have to plan and prepare for and keep on your calendar then. So it's pain hard if you do and hard if you don't. So yeah.
Okay, those are good options.
So what else back to the accounting then should we be looking at, Megan?
Right.
We did our balance sheet.
We got the balance sheet done, and we then should probably look at the profit and loss.
Sure.
So first question, did we make any money? Hopefully you've looked at this prior to November to find that out. But if you haven't, now's a great time. And you will want to ensure that you have your fixed asset purchases classified as assets and that they aren't hitting your profit and loss. So you don't want to have anything greater than $2,500 has to be capitalized according to the IRS, and you can set a lower limit for your own personal business if that's your policy, but anything over $2,500 you can't just expense. You could maybe Section 179 it and take that expense in this year, but it does still first have to be an asset, then depreciated by your accountant. So,
and what are some kind of purchases that you would see that people would put as expenses that really should be assets?
So sometimes people might put something like a vehicle. That would be one. Very large repairs.
Okay.
Sometimes we have to worry about whether those are actually repairs or if they're actually improvement to property.
Okay.
So some of those types of things can sometimes get in that wrong category. So it's all deductible. Again, it's just the manner in which you do that.
Okay, perfect.
And you also want to make sure that your loan payments were actually posted as loan payments, but hopefully you took care of that because you reconciled that loan.
Yes.
So that should already be taken care of. If not, and then making sure that your sales tax is another thing. Sometimes people call that sales tax expense. That's actually should have been accrued as payable and then paying off that accrued sales tax. So sometimes those are just common ones that people get in the wrong category. And then you also want to check that you have your uncategorized income. So sometimes we have an account called Ask My Accountant, or uncategorized income, or uncategorized expense, and just some category that you don't know what to do with it at the time. Make sure you look through that and get to the bottom of it. Contact your tax advisor if you don't know, and they'll help you. And then if you have a lot of things in miscellaneous, we try to keep miscellaneous to a minimum. So if it truly is miscellaneous, that's okay, but don't have 40 things in miscellaneous. Then maybe you need a new account.
Right. Don't use it as a dumping ground because I don't know how to deal with it.
Right, precisely. And then you also want to make sure if you have duplicate accounts, so we might have office expense and office supplies, you'll want to merge them together. And if you haven't checked out our videos on doing that, we can check those out and you can learn how to clean up your accounts while you're at it.
Yeah, perfect.
So and then hopefully you look at your margin. So your percent of income is another good column to turn on. Okay. And you can look at what percent of income you actually realize at the bottom and see if you need to make pricing changes, if you need to reduce overhead. How are you going to be more successful or even more successful in 2020?
Yeah, exactly. It's the goal, right?
That's right.
Even our nonprofit clients, obviously the goal is still that you're
Same
making
budget
money.
and
yes.
Right. So that's kind of the main things for the profit and loss.
Perfect.
So is there anything else at the year end that we should do with the humans?
Yeah, it's great, I think, to think about a holiday party, a holiday celebration. You don't have to call it a Christmas party if you've got, concerns about different religions and that, but you can call it a holiday gathering party. And it's just a good time for people to get together outside of the office. And it doesn't have to be just the holiday time. I know like this summer we did a gathering at MBS and got people together in the summer. But holiday is just a time we think about it as well. And it's just a chance to, again, get people together outside the office, get them to talk. When you are looking at ways that your business can be competitive with other businesses and help to retain your employees, having them feel a sense of connection and a sense of belonging to the company beyond just like, this is my job and what I do every day, will help you to keep those employees. So it doesn't have to be like you're spending a ton of money. That's not really what it's about. If you want to have it at your house and have your people over, that's fine. If you want to make the food, that's fine. If you come up with something that you guys want to do together and go out, I would say that ask your employees and get some feedback. There's nothing worse than planning something that you think is a great idea and none of your employees like it. So,
suddenly have plans and that's not going to work.
Exactly. You might love to bowl, but maybe you've got some employees that don't. So get their input. Doesn't mean you have to you might get 20 different opinions, so you're still gonna have to pick, but get their input at least so that you've considered it. And then make sure that you're scheduling something and getting it on their calendar as soon as possible. This obviously does fill up. If you've got kids, they've got some holiday Christmas programs or holiday programs, and you've got family maybe coming into town and just lots going on. So try to plan it so that people are aware of it and can get it on their calendar and can hopefully attend.
Right, yes. And if not, try for January.
Exactly.
Lots of people do that. It's like, the holidays are just too busy. And there's nothing wrong with that too.
Yes, exactly. That's a good
point. For us, January is a little too crazy with tax season, but lots of other people, it works great.
Yes, exactly. So, so back to our accounting then and that side of it. What else should we be doing for the year ends? We looked at our balance sheet, we looked at our profit and loss. Yes. What's the third thing you'd kind of recommend?
So another thing that you're really going to want to look at is the 1099s. And these can just be a complete bear for people.
Right.
Especially if you haven't collected those W-9s from your vendors.
Right.
And
so let's start with best practice, Megan. Hindsight is 2020. What would you recommend people do?
Right. So let's say you've been doing this all along and you're all set up. Start with collecting W-9s from all vendors that you issue payments to. And people are much more anxious to give you a W-9 that's properly filled out when they haven't been paid yet. Right. So if you do that, it's much easier to collect this information at that time. They are much more compliant. After they've already been paid, they're not so interested in getting you the W-9 because they have no incentive.
Right.
So if you can, collect W-9s throughout the year. Mm-hmm. So when you have a new vendor, collect a W-9. Once you have their stuff on file, you don't need to change it unless they let you know, hey, I haven't changed to a corporation or something like that. That would be the first step. So we've looked at our vendors, we now know. So then the information that's on a W-9 is their name, as well as their business name, also the entity type, because that is a huge determinant in whether we have to send them a 1099.
Sure.
So if they are a corporation, they don't need a 1099. And if you paid them less than $600, they don't need a 1099. But $600 is the threshold, so $600 or more, then they would need a 1099 for services if they're not a corporation. Okay, other things are rent and some attorney payments also have to be in there, some prizes and awards, other income payments, very obscure ones. Most people are thinking about box 7, which is the services.
Yes.
And that's what the IRS is looking for. And the deadline to send out 1099s as well as to submit them to the IRS is January 31st. So it really doesn't give much time.
Comes up quick.
In January. You start getting a couple weeks into January and suddenly,
especially if you need to collect the information.
Right.
If you've done everything up front, then not a big deal. But if you're having to chase that stuff down,
then it can be. Now, the other thing to remember is if you paid someone with a credit card or a debit card, you do not send them a 1099 because that's already going to be included on another 1099 from the merchant processor, and they don't want to have to double claim income, and you don't either. So don't send it if you paid with a debit card, credit card, but anything cash, check, electronic fund transfer, those all would need to go on to the 1099 if they're not an employee.
Sure.
And so I think that's the main things to know about 1099s. If you have any questions, of course, we're here.
Yeah. The other thing I think about when I think about that, and you're talking about vendors and how much you pay them, is just as it comes to the human side as well, and whether or not you consider somebody an employee or a subcontractor. And there's some pretty specific laws and guidelines around that. You can't just get out of calling everybody a subcontractor because you don't want to pay taxes.
Right.
They
can deal with their own taxes.
Yeah, there are some rules about when somebody becomes an employee, how much direction you're providing them, how much you're setting their schedule and things like that. So if you're unsure about that, I would say ask as well. We can help with that, or your accountant, or if you've got a human resource department. Just be careful that you get into you clarify whether somebody is a vendor / subcontractor or whether they should be an employee.
Yes. Yeah, because that's a whole different ballgame.
Exactly.
We won't go into that today.
That's right.
So is there anything else we should consider on the human resources side?
Yeah, so we kind of talked about think about annual reviews. We talked about thinking about whether you want a party for your employees. And the other thing I would say is bonuses. So people sometimes think of the holiday time as well, end of the year, as a bonus time. And again, this does not mean you have to do this. We're not telling you that, but it's good to look at least how did the company do. So you talked about looking at your profit and loss, right? So you're going to take a review of, was the company profitable? If the company was not profitable, then no, I would not be recommending that you give out bonuses. But if the company had some profitability, this can be a way to incentivize employees, again, help with retention, encourage them to stay, and how you do it, is up to you. Again, you could look at if you did a review or how they performed during the year, if they had a big project that they were responsible for, how they contributed to that. And you can give bonuses based on performance kind of and merit based. We've also seen companies that just say, everybody is getting X amount of money as their bonus too, and that's fine as well. So it's really up to you. If you decide to do this, make sure that the employees know that this is a discretionary bonus. This does not mean it's going to happen next year. This is the company was profitable this year. We want to share this with you and help you out, but it's not a guarantee for next year. And the big distinction on that as far as whether it's discretionary, non-discretionary, if it's, considered to be non-discretionary, you might have to pay overtime, depending on if it's considered part of their wages and work.
I see.
And you definitely don't want to do that. So,
no, right.
Exactly. But, obviously it's from the business perspective, it's good for your people, but also if you need to look at decreasing your tax liability, it's a good way to do that as well.
It's a good morale booster too.
Exactly. So that's the other thing I would say, just consider.
Right. Yeah, that's a great idea. So the other thing that's really tricky right now on the accounting side is the meals and entertainment.
Yes, we've had a lot of questions on that, haven't we?
Yes, with the Tax and Jobs Act and what's changing and what's not. And the IRS doesn't even 100% know this, but in general, well, for sure, not in general, for sure keep receipts and write justification for what you were doing. So if you are going to be deducting meals and entertainment, it's not, I didn't want to pay for lunch personally today, so I just decided to use this card.
Right.
That's not a great plan. So it should have some justification.
If you're meeting with a client, who you met with, and what you discussed.
And it can just be short. And then you can snap a picture of it and put it in your QuickBooks. So now you have it in
get an attachment on there.
Yes. So some items are not deductible now, some are 50% and some are 100% deductible.
Right.
So entertaining clients is now not deductible. So that used to be 50%, not anymore.
Right.
So going golfing, going to a Twins game, going all
Right.
those things, not deductible.
Right.
The entertainment itself. There's some possible like promotion advertising if you've done some giveaway or something like that, maybe, but not, hey, I'm bringing 10 people out and this is what we're going to do.
Right.
So there's some gray area with the meals while you were doing that outing that might be deductible if it was listed separately. And that would be 50% then. So meals with clients are still 50%. Office snacks and meals, 50%. And then occasional company-wide picnic, so staff function,
the holiday party.
That's 100% deductible. There you go. And meals and entertainment included in compensation. So if you took the employees out and then you included in their wages and said, well, you actually, just got $10 because I took you out to lunch, then that's 100% deductible. Right. But then you're paying, Social Security, Medicare.
Or what about if you're reimbursing for business travel? So you have a client, you're requiring your employee to go off-site, so you're paying them a per diem. You would be able to take that as a deduction as well.
Part of their compensation.
Yes, because you put it on the paycheck.
Yes, and there are so many gray areas with this, and it's still, even the IRS, like I said, hardly knows what is going on with meals and entertainment with the new Tax and Jobs Act. So, yeah.
The main thing is like being aware, but then also if you have questions, we can help you. Ask your accountant if you've got somebody like that. If it's kind of a gray area, you're like, I'm not sure how I should classify this. They would love to help you with that, I'm sure.
Yes, of course. So, steering down 2020.
Yes.
What do we need to consider for that?
Yeah, so we've done a lot of thinking about the end of the year, and that's really important, but now we also want to do some forward thinking. And, I love the quote that basically just says, if you fail to plan, you're planning to fail. Right. So looking at 2020 and having a plan, setting some strategic goals with that, and thinking about where you want your company to head. So as you reviewed your financials from the year, maybe you're like, we want to make more money, we want to increase our profit margins, we want to add some new employees, or hey, we've just added an office location. And so that's going to take some planning, and maybe we're not fully staffed there, or just a lot of things that your business, depending on what business you're in, that you could be facing. But I know we sat down and we tried to do this, and it doesn't have to be like a major, you go away for a large retreat, maybe it's just a lunch. Right. And you said
a long lunch.
A long lunch, yes. But you talk about, what are our goals for the year? And then once you establish those, assigning accountability. Right. So it's great to have goals too, but let's talk about the specifics and how we're going to get there and who is accountable to make sure that that's done.
Right. And then make sure you communicate that to your employees.
Yes.
So that they are on board with it, because they're going to be the mechanism to make that happen.
Exactly.
And to meet those goals. And then you can reward them again next year.
Yeah.
So, yeah,
exactly.
I think it's really an exciting time.
Yes.
End of year, and thinking about the holidays coming up and all of the self-analysis that we can do on the business side, and just kind of really gear up for another great year.
Right. Yeah. We love helping people that have questions. The clients we've served already, I'm looking forward to new clients. And like Megan said, it's just a really exciting time of year. It can be stressful for people too, but that's how we want to help you and just help you think about the things and plan and help with that.
Yeah, and if you need help with your accounting so that it's not so stressful this time of year, so you don't have a giant stack of things, we have some systems that can help with that too.
Yes,
so
exactly.
Check us out. If you have any questions, don't hesitate to reach out and ask. That's why we're here. Yeah, so thank you, everybody. Thank you. We appreciate it. And call or go to our website. It's www.multi-business-solutions.com, and you can find all the stuff there. Right, or phone number 218-770-2691. Perfect. Thank you. Have a great day.